Hi, I'm Jeff Fouts, a tax attorney located in Metro Atlanta with a nationwide law practice helping clients who have serious IRS problems. I'd like to talk about another client case study with you. A man in his early 50s from Levy, Georgia stopped by our office to see if we could help him prevent the IRS from levying his wages. He said that if his employer levied his wages, he'd be unable to pay his court-ordered child support payments, and that the state of Georgia would hold him in contempt and put him in jail. A pretty serious thing. Our first step was to obtain a signed IRS Form 2848 and a Form 8821. What that did was that allowed us to represent him before the IRS and allowed the IRS to give us information. So what we did is we began gathering information about his case from the IRS, and we called them to get his account transcript, which would show us several important pieces of information. We also had to be sure the client had filed all his required tax returns. His account transcript showed his total liability to be close to $80,000 for tax years back to 2002. We could also see that the IRS had not received one of his recent tax returns. Our client had worked for over 10 years as a contractor and had not had taxes withheld from his pay. The client was not familiar with the IRS requirements that taxpayers have to make estimated quarterly tax payments. We were able to tell our client that we were going to try to do our best to prevent the levy from actually taking his money and preventing his child support from being paid. One piece of good news was that according to the U.S. tax code and IRS regulations, the IRS is supposed to allow court-ordered child support payments to be deducted from income before an IRS levy starts taking other monies out of that income payment. The IRS code is very clear on this point if the person is receiving W-2 income. The problem is that the tax code isn't as clear when the income being levied is some type of income different from W-2 income, such as 1099 payments. Due to the requirement that an employee's failure to comply with an IRS levy action could result in that employer becoming liable for the delinquent taxpayer's unpaid tax debt, it's very important that the employer or the person paying the levy take out the right amount, not too much and not too little. Our client's employer was understandably worried about how to comply with the IRS levy out there, since there was this ambiguity about how different kinds of income should be handled in regard to child support payments. So what we did was that we requested that our client prepare and file his unfiled tax returns as soon as possible, which he did. And this removed a big hurdle to dealing with the IRS, because they would have demanded that certain tax returns be filed before looking, even considering what other options our client had to deal with the tax problem. We also requested that the client begin making monthly estimated tax payments. Why? Well, we were asking him to do this to show the IRS that he now understood how to pay his taxes on time and how to pay the right amount. And so this shows a lot of good faith of the IRS, and we were able to convince the IRS to release the levy on our client's wages. Next, we collected and analyzed the client's financial information. We also had our client file his current year tax return. He continued making his monthly estimated tax payments like he was supposed to, and his financial situation showed that he did not have any available income to make payments to the IRS. So we were able to have his tax debt placed in what's called currently not collectible status, which is a kind of a hardship status. This is a temporary status, though. It doesn't last forever. Well, it can last forever, but it continues until the taxpayer's income increases a certain amount by a certain percentage or something like that. Actually, those things are secret, but we have our opinion as to what that increase is. The IRS tracks whether his income goes up by looking at his future tax returns. So what's the moral of this story? The moral is that the IRS wage levies and bank levies are very serious collection actions, and they can take not only your money, but your peace of mind as well. Your goal should be to deal with the IRS levies as quickly as possible. And on candor, you should deal with them before they even come. If you've got a tax problem, you don't need to wait. If you wait until the levy comes, it gets more expensive and more painful. I hope this important client case study has helped you understand the IRS a little better and how tax problems are solved. Chances are you have questions or concerns about your own particular tax problem. I encourage you to pick up the phone and call me. I can answer your questions. Over the past 20 years, I've represented clients in all 50 states and 29 foreign countries, and I welcome your call. You can reach me at the phone number on the video here, or you can email me at jfouts@taxhelpattorney.com. I'm Jeff Fouts, and thanks so much for watching. Have a wonderful day.